Welcome back to the Crypto Intellect, your home for the latest XRP news, crypto market analysis, and the biggest developments shaping the future of digital assets. XRP holders, the countdown has officially begun. Right now, the market feels heavy. Sentiment is low, confidence is shaky, and many investors are wondering whether we are looking at the final stage of this correction or whether there is still more pain ahead. Across the crypto market, prices have been under pressure, and XRP has not been spared from the sell-off. But what makes this moment so fascinating is that some of the biggest opportunities in financial markets often appear when fear is strongest. That's why today we're diving deep into what could be one of the most important periods for XRP and the broader crypto industry. The next few weeks could determine whether this market finds a bottom and begins a powerful recovery or continues struggling through uncertainty. Either way, the clock is ticking, and XRP investors need to understand exactly what's happening behind the scenes as this critical countdown continues. The mood across the cryptocurrency market has shifted dramatically over the past several days. Bitcoin has experienced significant weakness, breaking through major support levels and creating concerns among investors who expected stronger performance. XRP has followed the broader market trend, finding itself under pressure alongside many major altcoins. Solana, Cardano, Avalanche, and several other large-cap cryptocurrencies have also struggled to maintain momentum. What we're witnessing isn't an XRP-specific problem. Instead, it's a market-wide reaction to uncertainty, caution, and a lack of immediate catalysts. When investors become nervous, they often reduce risk exposure first and ask questions later. That's exactly the type of environment we're seeing right now. However, experienced market participants understand that moments of maximum uncertainty often create the foundation for future rallies. The challenge is that nobody rings a bell at the bottom. Markets don't send out invitations announcing the perfect buying opportunity. Instead, they create fear, confusion, and doubt before eventually reversing direction when the majority least expect it. One of the biggest questions XRP holders are asking right now is whether current price levels represent opportunity or danger. The answer depends entirely on an individual's perspective and risk tolerance. Some investors look at falling prices and see reasons to panic. Others look at the same chart and see discounted assets with significant upside potential. History has repeatedly shown that retail investors tend to sell when emotions are strongest and buy when excitement returns. Unfortunately, that often results in buying high and selling low. Right now, many investors appear to be shifting attention away from crypto and toward traditional markets, especially the booming artificial intelligence sector. AI-related stocks have captured enormous investor attention, producing impressive gains and attracting fresh capital. Meanwhile, crypto has struggled to generate similar enthusiasm, but markets move in cycles. Capital rotates from one opportunity to another. The sectors receiving the most attention today are not always the sectors that will lead tomorrow. That is why smart investors continue monitoring both fear and opportunity simultaneously. Veteran crypto investors have seen similar situations before. During previous bear markets, sentiment became overwhelmingly negative. Many people declared crypto dead. Others insisted prices would never recover. Yet those periods often produced some of the strongest future gains. When Bitcoin traded near major lows in previous cycles, many investors dismissed the possibility of recovery. The same skepticism existed before substantial rallies that followed. Nobody can guarantee that history will repeat itself exactly, but market psychology tends to remain surprisingly consistent over time. Fear reaches extremes, sellers become exhausted, and eventually buyers begin stepping in. The current environment shares some similarities with those previous periods. Confidence is weak, uncertainty is high, and many investors are questioning their convictions. Those conditions don't guarantee a bottom, but they often appear near important turning points. That's why the coming weeks are attracting so much attention from analysts, traders, and long-term investors alike. One of the most important developments on the horizon is the potential progress of the Clarity Act. This legislation has become a major focus for the crypto industry because it could provide much-needed regulatory certainty in the United States. As lawmakers return to Washington, attention is shifting toward whether meaningful action can occur before the upcoming holiday break. Timing matters because political environments can change quickly. Supporters of the legislation argue that passing clear crypto market structure rules now would provide stability, encourage innovation, and strengthen America's position in the global digital asset industry. Opponents continue raising concerns about oversight and implementation. The outcome remains uncertain, but the importance of the legislation cannot be ignored. For XRP holders specifically, regulatory clarity has always been a central theme. The industry has spent years navigating uncertainty, and many believe clearer rules could unlock significant institutional participation. That possibility is one reason why investors are watching every development surrounding the legislation so closely. The countdown element of this story comes from the narrow window available for meaningful legislative progress. Every passing day reduces the amount of time available for lawmakers to move the process forward. If momentum builds and discussions advance, markets could begin pricing in expectations before any final decision occurs. Financial markets are forward-looking by nature. They often react not only to events themselves, but also to expectations surrounding those events. That means XRP and the broader crypto market could experience increased volatility as investors attempt to predict outcomes. Some traders may choose to position themselves ahead of potential developments, while others may prefer waiting for confirmation. Both approaches carry risks and rewards. The key point is that uncertainty creates movement. As the deadline approaches, market participants are likely to become increasingly sensitive to news headlines, political commentary, and legislative updates. That dynamic could contribute to significant price swings in either direction. Another factor influencing the market is the broader geopolitical landscape. Global investors are closely monitoring developments involving international tensions and economic negotiations. Markets generally dislike uncertainty, regardless of whether it originates from politics, economics, or regulation. When major questions remain unanswered, investors often become cautious. That caution can translate into reduced risk appetite, which affects cryptocurrencies alongside other speculative assets. While traditional stock markets have shown resilience in certain areas, particularly within technology and AI sectors, crypto markets have faced additional pressure from regulatory uncertainty and shifting investor sentiment. The combination of geopolitical concerns and pending crypto legislation has created an environment where many investors are choosing patience over aggressive positioning. Until greater clarity emerges, volatility is likely to remain elevated. However, periods of uncertainty also create opportunities for those willing to look beyond short-term noise and focus on longer-term developments. One development that has not received enough attention is the steady growth of institutional infrastructure supporting cryptocurrencies. While prices have struggled, major financial institutions continue expanding access to digital assets. This trend suggests that adoption is advancing even during periods of market weakness. Institutional players are not building infrastructure because they expect crypto to disappear. They are investing resources because they see long-term demand. Every new trading platform, custody solution, and financial product expands access for investors who previously faced barriers to participation. These developments may not generate immediate price rallies, but they contribute to the foundation of future growth. For XRP, institutional infrastructure matters because broader access often translates into greater liquidity, improved market efficiency, and increased participation from professional investors. Adoption tends to occur gradually before becoming obvious to the broader public. By the time most people recognize a trend, much of the groundwork has already been completed. One particularly notable example involves major brokerage firms making crypto access easier for their clients. This is important because adoption often accelerates when investors can purchase digital assets through platforms they already trust and use regularly. Many people are not interested in creating new accounts, learning unfamiliar systems, or navigating complicated onboarding processes. However, if crypto becomes available through existing financial relationships, barriers to entry decrease significantly. That convenience can have a powerful impact on adoption. Investors who have spent years buying stocks, ETFs, and other traditional assets may become more comfortable exploring cryptocurrencies when access is integrated into familiar platforms. This shift represents a gradual but meaningful evolution in how digital assets are reaching mainstream audiences. The easier participation becomes, the larger the potential pool of future investors. That's one reason many analysts remain optimistic about long-term adoption despite current market weakness. Looking specifically at XRP, the long-term thesis extends beyond short-term price fluctuations. Daily charts can create emotional reactions, but broader trends often tell a different story. XRP continues to maintain a prominent position within discussions about payments, cross-border transactions, and institutional blockchain solutions. Supporters argue that the asset remains uniquely positioned to benefit from increasing demand for efficient global value transfer. Critics continue raising questions about competition and adoption rates. Regardless of which perspective ultimately proves correct, XRP remains one of the most widely recognized digital assets in the industry. Its ability to remain relevant through multiple market cycles demonstrates the strength of its community and the significance of its ongoing development efforts. Long-term investors often focus less on individual weeks or months and more on the trajectory of adoption, infrastructure growth, and regulatory progress over years rather than days. Another major development generating excitement is the expansion of around-the-clock institutional crypto trading. Traditionally, certain financial products operated within limited trading hours, creating gaps and inefficiencies. The move toward continuous 24-hour, 7-day-a-week trading reflects the reality that digital asset markets never sleep. Crypto operates globally, and investors expect access at all times. Expanding institutional trading capabilities helps align traditional financial infrastructure with the always-on nature of blockchain-based markets. This evolution could improve liquidity, reduce friction, and create a more seamless trading environment. It also demonstrates that institutions are adapting to crypto rather than expecting crypto to adapt to traditional systems. The significance of this shift extends beyond convenience. Continuous access reflects growing confidence in digital assets as a legitimate asset class deserving of dedicated infrastructure and professional market support. The growing role of XRP-related financial products within institutional markets has also attracted attention. Strong demand for XRP-linked instruments suggests that professional investors are increasingly interested in gaining exposure through regulated channels. Institutional participation often follows a different timeline than retail enthusiasm. Large organizations move carefully, evaluate risks extensively, and prioritize infrastructure reliability. When demand appears within these segments, it can signal broader confidence in long-term market development. While institutional interest alone does not guarantee price appreciation, it represents an important component of market maturation. Mature markets require participation from diverse groups, including retail investors, institutions, market makers, and financial service providers. The continued expansion of XRP-related products suggests that interest extends beyond retail speculation and into more sophisticated areas of the financial ecosystem. Market sentiment remains one of the most fascinating indicators to watch during this countdown period. Fear indexes and sentiment trackers provide insight into how investors are feeling, but emotions can change rapidly. Extreme optimism often appears near market tops, while extreme pessimism frequently emerges near market bottoms. Current sentiment suggests caution, concern, and frustration. Many investors expected stronger performance, particularly given the positive developments occurring behind the scenes. Instead, prices have struggled, leading some participants to question their assumptions. Yet markets rarely reward the majority view for extended periods. When everyone expects one outcome, markets often move in the opposite direction. This doesn't mean a rally is guaranteed, but it highlights the importance of understanding crowd psychology. Sentiment can remain negative longer than expected, but it can also reverse dramatically when catalysts emerge. As we move deeper into this critical period, the possibility of sudden volatility increases. Markets may react sharply to legislative updates, institutional announcements, geopolitical developments, or broader economic data. Traders attempting to predict every short-term move face significant challenges. Long-term investors, meanwhile, often focus on broader themes rather than daily fluctuations. Both approaches require discipline and risk management. The key takeaway is that uncertainty remains elevated, and elevated uncertainty often produces larger price movements. Whether those movements ultimately favor bulls or bears remains to be seen. What is clear is that the next several weeks could prove highly influential for XRP, Bitcoin, and the entire crypto market. The combination of regulatory developments, institutional adoption, and evolving market sentiment creates a powerful mix of potential catalysts. Many investors are now asking whether the market is preparing for a classic buy the rumor, sell the news event. This scenario occurs when assets rally in anticipation of a positive development and then experience selling pressure once the event actually occurs. It's a common pattern in financial markets because expectations become priced in before official announcements. If optimism surrounding crypto legislation grows, markets could begin reacting before any final outcome is confirmed. On the other hand, uncertainty could continue suppressing prices until greater clarity emerges. Predicting which path will unfold is extremely difficult, even for experienced analysts. That's why risk management remains essential. Investors must evaluate their own time horizons, risk tolerance, and convictions, rather than relying solely on market narratives. The countdown may be underway, but nobody knows exactly how the market will respond when the clock finally reaches zero. As we close today's discussion, one thing is becoming increasingly clear. XRP is entering a period that could define the next phase of its journey. The countdown has begun, not just for potential legislative developments, but for broader questions surrounding adoption, institutional participation, and market confidence. Fear remains present, uncertainty remains elevated, and volatility remains likely. Yet beneath the surface, infrastructure continues expanding, institutions continue building, and the conversation around crypto regulation continues advancing. Those factors suggest that important changes are taking place regardless of short-term price action. The next few weeks will be watched closely by investors around the world. Whether this period ultimately marks a major opportunity, a temporary setback, or the beginning of a larger transformation remains to be seen. What is certain is that XRP holders are approaching a pivotal moment, and the entire crypto community will be watching the countdown unfold. If you enjoyed this update, make sure to stay tuned to the Crypto Intellect for all the latest XRP developments. And as always, keep learning, stay informed, and position yourself wisely for what comes next.